when we create these deficits, okay, that deficit has to get funded somehow. How does that get funded? That gets funded by the Fed issuing IOUs. And the popular video last week was China is selling our treasuries, our IOUs, and buying gold, right? So what is when you're adding $1 trillion to every 100 days to your deficit, that deficit has to get funded. Okay, so the deficit starts with the fiscal problem in DC, right? Because they can't balance the budget, just like I balance my budget every month in my house. But these people cannot balance the budget to save their life. There have been attempts in the past, but it's not working now. Whichever side it is, the Democrats or the Republicans, they just like spending money because it's not their money, it's your money. But what they have done is the monetary policy is forcing fiscal policy to issue more debt. They have to balance the budget by issuing more IOUs. Okay, and the U.S. government is spending as if we were in a crisis. It's very true. So look at this chart on the right hand side. You guys see the circles with the spikes? This chart goes back to, by the way, 1790s. It goes to the Civil War era. Okay, because once in a while you have to look at the bigger picture of what's happening. All these spikes are circled and how much the government had to spend money to come out of that crisis. Okay, the one in the 1860s is the Civil War. The government had to pump 14%, extend the spending 14% to save the economy out of the abyss. The second one was World War I, 24%. Okay, the third one, spending. This is spending going up, right? The third one was World War II, 44%. Okay, we're at the levels, and then after the crisis is over, this money is spent. Obviously, it goes into the economy, and then the economy comes back. And there's certain stability period until the next crisis, which was the great financial crisis. Okay, at the moment, we are spending. Okay, our GDP is close to I think 7 trillion. But what we're doing now, the spending, the percentage to the GDP or compared to the GDP is running at 44%. During COVID, it went up to 54%, right? This is how the deficits are getting created. This is how much money we have to spend to keep things going, right? Look at that chart, right? We are at the moment, our spending compared to the GDP, US government expenditures as percentage of GDP hit 43%. Okay. During COVID, it went as high as 54%. Think about this, people. Our total production of this country is about $7 trillion, what the economy produces, all the states as a federal government. We're taking almost half of that and spending it. And we have the budget deficits to boot on top of that. How is this going to end? Is it going to end well? Are we going to keep doing this forever until somebody wakes up and says, hey, man, what are we doing here? But, maybe it's only me. Maybe I'm the dumb one in the room, right? I mean, this is not talked about. This is talked about in a lot of circles. But, it's like, what have you done for me lately works in this country. We have just short-term memories. As long as we have our new iPhones every 2 years, and then a new large screen TV so we can watch the Super Bowl or football games, I'm good. I'm like, no, you guys got to think a little deeper than that. So that's what I'm trying to do, just kind of warn things that are just about to go sideways. And I hope it never does happen. But this cannot continue. So let's put this in perspective, right? Spending as percentage of GDP is just 1% below World War II levels. And World War II levels, we know what happened there, right? Let's not forget the life loss, obviously. But, in every war, like the Iraqi war, let's say, how many trillions did we spend on it? And what happened with that? Where are we with that? So wars are created and wars are fought with immense amount of pressure on the economy because we have to produce, we have to obviously buy weapons, we have to improve our defense. But in a good economic time, right? I understand crises, but in a good economic time that the Fed says we're in, why are we still spending so much money? This is the time to cut spending. No, we're not doing it. Even at the peak of World War I, US government spending as percentage of GDP was 20 percentage points lower than what it is now. And I understand the economy is larger, but then this is a percentage of GDP. The country is always producing more, right? We're up to 7 trillion GDP, gross domestic product. That's the output of the economy. Why do we keep spending half of it? I have no idea. God knows. And while the Chairman Powell is saying, yeah, we're going to do the soft landing, and the economic data is strong. Okay, well then this is the time to put your house in order. If the economy is strong, right? Stop the spending. You don't have to spend 40% of your GDP. Just spend maybe 20% of your GDP. Take it back down to the World War I levels of 24%. No, they're not going to do it. Of course not. And so, I mean, to me, this continues, right? Now, I started with the deficit situation, right? This deficit is an IOU. It's a loan, right? People are around the world, globe, which Chinese are cutting their exposure now. The Russians are as well. What's happening is that because of the deficit, we have to issue these IOUs called bonds, okay? And these bonds carry a coupon. Coupon is the interest rate on the bond. We have to pay interest. Just like when we go to a bank to get a car loan or a mortgage, we have to pay interest. There's no free meals, right? Well, this is the same thing with the US government. Now, you guys have to understand, when the Fed raised the interest rates from 0 to 5%, they have to pay that 5% to whoever is the note holder or the bond holder, right? Okay. So that's called carrying cost. We have a interest cost on all this money that we're borrowing. Just like we go buy a car, we have a car loan. Well, US has $34 trillion of debt floating around the globe. A lot of it in the US in pension plans and 401ks and things like that. So when the rates went, they had to raise the rates to kill inflation, which we talked about. But when the rates go from 0 to 5%, the interest cost on this massive amount of debt that we have created has gone through the roof. Now, let's put that in perspective, okay? For the first time in history, annual interest payments on the US national debt, this is just the interest payment, okay? This is just like you have a mortgage, the first 20 years you pay interest only, and then you pay down the principal, okay? For the first time in history, annual interest payments on US national debt will overtake defense spending in 2024, according to the CBO. CBO is the budget office, right? It is projected that for the full fiscal year 2024, interest spending, just the interest spending, will hit 900 billion. Now think about this, people. That's almost $1 trillion in interest payment only that we're sending around the world. Okay? Now, if we did not have that 34 trillion, could we use that 900 billion to get the infrastructure of this country going, to get, to help the needy a little bit more? And look, I'm not political. I'm not Democrat or Republican. All I'm saying is that 34 trillion in debt is an anchor holding the economy back. If we didn't have that, our GDP would grow a lot faster, right? And everybody would prosper. But no, the powers to be decided that we need this debt. We need $35 trillion of debt. And just the interest payments on it is $900 billion a year, which is surpassing the defense budget of $600 billion. In Q1 2024, interest costs hit $1 trillion on an annualized basis, and were $29 billion higher than the defense outlays. Okay, it's not done yet. In the first 7 months of 2024, interest was also higher than spending on Medicaid, which people need, right? Medicare, which is the retired folks, right? Healthcare, and defense at 514 billion. How is this making any sense to anybody? I don't know. Maybe I must be the dumb one in the room, because I don't think anybody cares about any of this stuff except me. maybe I worry too much. I shouldn't probably. I just should go borrow money like the government and spend it on some garbage. Okay. Meanwhile, in 2023, interest percentage of GDP was the highest in 25 years. US government needs to lower interest rates more than ever. Do you guys understand now what's happening? They created inflation by pumping money. They had to, I guess. They created these deficits. While on these deficits, the interest payments are up to $1 trillion a year now. Well, when the rates went from 0 to 5%, that's what happened. When the rates were at 0%, the interest payments were very negligible, obviously. Well, now that they raised it to keep inflation, do you see how they're put themselves in a hard place in Iraq? Do you see what's happening here? Right? So, that's why they have, because we can't keep paying $1 trillion a year in interest, because that's going on top of the deficit. Because to pay that $1 trillion, how are we paying that $1 trillion? We're creating more money out of the blue to pay the interest. And then when the bonds mature, we have to float new bonds to replace those bonds. And those bonds are going to carry a 5% coupon as opposed to a 0% coupon. So bond auctions take place literally every single day in this country, from T-bills to T-notes to 10-year notes, 20-year notes, 30-year bonds, right? So all we're doing is basically adding to one side of the ledger. The cost of carrying that debt has gone through the roof. And that's why now the Fed is forced to lower rates, because we can't keep paying $1 trillion a year in interest, right? And at the same time, though, right, the stock market is an all-time high while the Fed is forced to cut rates. I mean, are we going to get a melt-up of melt-ups? Probably. I don't know. So, and this is wonderful, which is cohorts with the Fed, the Treasury. This is Janet Yellen, our Treasury Secretary. Look at this, what he says. Look what she says. Look at these people, okay? Treasury Secretary Janet Yellen says U.S. debt load is in a reasonable place. Huh? What? The debt going up $1 trillion every 100 days is a reasonable place? Janet Yellen? I'm not getting it. And then it says, she said, it's a reasonable place because it remains at current levels relative to GDP. We just looked at it. We're at close to 44%, Ms. Yellen, of GDP. What happens if the GDP slows down? What happens if we go into a recession? Then what percent of that, of GDP, is going to be that interest payments and the deficit? What do you think is going to be? Janet Yellen? Huh? Think about it. And meanwhile, U.S. debt is currently rising by 1 trillion. This was the T, people. I mean, how many zeros are in a trillion? 15? Every 100 days. Who's going to tell her? I'm telling her. Janet Yellen, stop the mockery. Get your shit together. Get your house in order. Start with DC. Clean this mess up over there. Because these people don't know. They see $1, they just grab it and spend it. This is all hocus pocus. This is all garbage. This is all Wall Street speak. This is not average American speak. So that's why I created this channel. Maybe I'll get some traction by talking the truth. I'm an average American. So is probably all of you who are watching and going to watch later. This is hocus pocus. I'm not buying any of this. Come talk to me. This does not apply to our lives, the average American's lives. Okay? So, with all due respect, Janet Yellen, the debt load is not in a reasonable place. It's absolutely ridiculously unreasonable.